Resource valuations, um, estimating future reserves. Bum, bum, bum. So yeah, so how much will they mine? So I always estimate their future reserves in order to identify future cash flow. So I estimated myself, and this is something you can do as well, because I want to use future cash flow to compare, um, to get an idea of the valuations, the value of their current value of the resources and their future value of the resources. So I'm going to calculate how much their current resources are worth per ounce. And I'm going to value that versus their current market cap. And then I'm going to calculate their future reserves, how much they're worth per ounce versus the current market cap. It gives me valuations of the resources. So a quality major's their current reserves will be worth around $500, and a current exploration is only worth about 100, and a mid-tier is worth about 250. And so you have these are strong producers, and it can go higher than this. This is the average. You can see producers up there, $800 an ounce, somewhere in there, and you can see mid tiers all the way up to as much as 500. So you can find gold in the ground for $25 if you're a producer, and then it can be valued all the way up to 500 or more. So you see, I mean, like a mid tier, if they can find gold for 25, I mean, 10x, it can be worth 10x that. So exploration is just a huge leverage for these companies. Every ounce that they add to their reserves is going to add a lot of money. So you can see where exploration really comes into play. So if you can, so now we get into, okay, this is what they're worth. So if you can if you can find companies that are worth less than that, so if you can buy a gold in the ground from a major for like $100, that's pretty cheap. So you have these sell-offs. These companies, they'll have a problem and they'll get cheap, and so a major, if you can find one that's currently valued at 100, that's pretty cheap, or a mid-tier at 50, I mean, you're basically looking at a five-bagger. So I try to find gold on the ground currently valued, under 50. You're really not going to look at majors per se. Every once in a while, you'll see them drop down to 100. But majors, I'm really looking at majors more as like three-baggers, not so much five-baggers. But mid-tiers and development stocks, you can find them for 50. So any gold company, if you can find quality resources for $25 an ounce, it's usually a bargain. And sometimes you can find gold in the ground for $10 per ounce. These are I call these optionality plays. So if you can find, I'm focusing on gold here, not silver, but if you can find gold in the ground for $10 an ounce or less, and it's a big resource, that's an optionality play because it can get revalued higher as the price of gold goes up. And we found this out last year. In 2020, we saw these optionality plays like in March. I mean, a lot of these companies were selling for valuations, of $10, $15 an ounce for gold in the ground, silver, a dollar or less in the ground. And they just exploded in value because the price of gold and silver went up. And that's the optionality play. So you're looking at, around $10. And again, silver's, about, you can go 10 of X of this, so it's like $1. And then all the way up to 250 for silver. 1 to 250 is kind of really cheap. So that's kind of what you're looking at, the values in the ground. When you're looking at, we're looking at just resources. We're just kind of looking at, this was just kind of looking at current values of gold.